So, Kaspar, we are going to look ahead now.
Yes.
Last week we looked over our shoulder back. Now it's time to look ahead. I think we're going to start with some macro news on the economy, inflation, slightly.
Normally, we always start with a question. So the question is,
Oh, yeah, well, the question, I think, is more a statement. We want to make a statement today. How will 2023
look like
in
from an
12 months? So
investor perspective?
Yes, and it's really tricky because next year we can look back and then we can say, okay, we made a mistake. It sometimes happens. We can admit. Because you can't look really ahead in the future, but we can have our vision and we can share that with the viewers.
Well, what we did, and we did our homework,
Yes.
and it's also because next Wednesday we have a seminar in our office.
Yes.
In Spain, in Marbella.
Yeah.
At 5 o'clock, and then we take this topic. We also look back, but more in depth than we did last week in the market reporters.
Yeah. So if you live in Marbella, live in Malaga area, you know where to go next week.
Yeah, and also going to look forward, and we want to highlight some stuff
Correct.
that we are going to discuss next week in this market report.
Yeah, what we use as a basis is mainly outlooks, but not only from one entity, and so not only Morgan Stanley, not only JP Morgan, we used Goldman Sachs,
We used them all.
The World Bank, and really took out those things that we agree with, and also things that we found ourselves.
Yeah, it is so much to read. And we read so much. There are so many outlooks.
Yeah, absolutely.
So what we try, we don't give. Yeah, I think you said it really nice. We take the things out where we believe, but it's not. We reuse some information,
Exactly.
and then we say why we believe in that.
Yeah. Okay, so let's start. I think with the topic China. No.
Yeah, I think China's in the news all the time, and of course they have the restrictions, the COVID restrictions released.
Yeah.
And that will do something with the economy. And still, the analysts think that the economic growth of China will be under the figure will be under the average of the world, and that's for the first time in 40 years.
Yeah, that's still not good, but it's also, I think, because of the fact that COVID is hitting them really badly now.
Yes.
So there's a lot of travel restrictions again.
Yes.
And those sort of things.
But you said last week something about the money that they save.
Yeah, they have double the amount of money on bank accounts. So that is obviously positive. Since pre-COVID,
like 2 years ago.
2 years ago.
Yeah,
and another really interesting thing I also heard this morning was that companies like Alibaba, they had a lot of restrictions, a lot of issues with licenses, and there was the big IPO that was planned. You remember with ANT Group?
Yeah.
Well, they have been given some space now to look back in space. I mean, with the government granted them some room to reopen those discussions to bring out this IPO, which would have been the biggest IPO in history. Yeah. So, and the stock price of Alibaba obviously really responded positive.
We talked also this year about the real estate industry and that collapsed. So we think that because of the growth for this year, for the low growth, be careful because the internal market is suffering.
It's really suffering. And I think that is a very clear conclusion on China that you should be very careful.
And also I wanted to mention one more thing is that we're not going to talk about the war. We talked about the war a lot. And of course the war will influence what happens on the world scale and also in the market. So
mainly on the known topics, I think, on energy prices. And you know that is a really big issue, the energy prices, mainly in Europe.
Yeah.
But we have it a little bit... eigen schuld, dikke bult, they say in the Netherlands, by how is it?
Own fault.
Own fault because of the politics that closed all the nuclears and all that sort of thing.
So we want to keep a little bit far away from that.
Yeah.
And if you look at the economic growth, estimated economic growth of the US, that will be around 1%, so a small growth. And it's also the opinion is that they will help the world from an economical perspective. Yeah, so they're the motor of the world, one of the motors of the world, the motor in the US, that will stay plus. So that will also trigger the other economies that I think. And Europe also will be around 1%. It depends which side.
Okay, but it depends on also which because other analyst reports say that Europe is going to get into recession no matter what. They will have a recession.
Yeah, okay, but it can. But overall, if you talk about 2023, there will be economic growth. So what the estimations are, the first part of 2023 is the worst part,
Yeah.
and then the recovery comes. And for example, if you look at in Europe, in Spain, where we are, they expect more and higher economic growth than on average in Europe. And in the UK, a little bit less than the average, but it's close to each other. So on
So what,
average, a
if we
growth.
look on the big, like more developed continents, US, Europe, and China, we say careful with China, Europe, and in the US is so like
Yeah, a little bit more
a
positive.
little bit more positive.
Yeah,
Not very positive still.
and it's they base it a lot on the unemployment rates. And of course, this week you see some big layoffs.
Yeah.
With Amazon today, that was announced.
Salesforce.
Yeah, Salesforce, but still the market is really strong, and that keeps the US market probably in the plus.
Yeah, they had this phenomenon that what also was on the Dutch TV this morning, that companies held on to people because it was so difficult to find
Yeah.
because the market is so competitive. So okay, we got somebody that's doing
We
his
keep
job
them because
for
it's really
80%.
difficult to find a
To
new
find
one.
another
Yeah.
one, yeah. So and now you see that we're getting to the shift of that the companies start to lay off people.
Yeah, inflation. The estimations are that this year the inflation in the Eurozone will be around 6-7%. And you also, of course, you see it already from November that it's decreasing, and probably in December also. And that's a good sign, of course. So now the discussion is, okay, can the ECB and the US, the Fed, can they already start lowering or thinking about lowering the interest rates? But the Fed yesterday said the opposite. No,
They're definitely not ready for that.
no, we don't have
Well,
enough.
it was
enough.
yesterday also not so excited because it was basically what we already knew in December.
Yeah.
It's just the minutes of the meeting. But yeah, they were quite tough on the wording, and they said, well, we'll see, and they're not so clear about when they're going to stop it.
No, and the estimations for 2024 are around 2.5%
Yeah.
inflation. That's
Inflation.
almost back to normal.
Yeah, that's their goal. Yeah.
Um,
It's a very difficult discussion.
yeah, it is. And we have some information on here because we have a lot of figures, a lot of data, and that's I know there's one that I saw a chart, and maybe we can put it in the screen. It's about the amount of money that from the income people saved in the US.
Yeah, that's gone almost down to zero, right?
That's almost gone down to zero, and that was like I think 25%. That was in during COVID.
Yeah.
And that's almost down to zero, but it's also a lower
than pre-COVID.
Yeah.
Yeah. So I know the chart you're
Yeah.
referring to, and indeed, that means that people are.
But it means that all people are using their money to invest or to spend.
Yeah, but if they were all invested, then you would see the more positive stock market, maybe.
Yeah, but you see that also the last part of 2022.
Yeah, maybe.
It goes a little bit hand in hand.
Yeah.
Or they need it because of the inflation. That's also possible.
I think that's
probably
more
no?
obvious. Yeah.
Yeah. And I think that if you look on a sector basis,
Yes.
the sectors, and we saw that in multiple analyses, the sector where probably the growth will be, and of course, if new things happen again with the war, it will be completely different. That's the tech sector.
Technology, yeah.
Technology.
That's funny because I mean, this is from JP Morgan, but if you look at Morgan Stanley, they were very critical about the mega cap stocks like Apple, Alphabet, Meta. They said all the FANG stocks, sell them or get rid of them. Amazon, they were really not so positive about it.
Yeah, but I think it's strange to say, but because if you look at Amazon, they had a really bad year, and also for next year, it's the estimations are not good.
Not good, no.
But if you compare it to Microsoft, they had a better year 2022 than 2021, and also for 2023, it's expected it's a good year. So I don't understand why they say all those big tech companies you should sell. I think you should do more your homework.
Yeah.
And that's what JP Morgan says. There are really good tech. The tech industry we discussed it last week, was the worst in the US, the worst industry
In 2022.
Yeah. So the whole market is down. So there's a negative, a
Yeah,
negative.
but they said that people don't want to pay these high valuations anymore.
Yeah, but if you look at Meta, it's 10 times the profit. It's not a high
It's
valuation.
not a high valuation. No, you're right.
And Google, Google is, we also want to discuss Google because how is I think you already saw the new IE tool that's on the market now. AI tools.
Copy AI. Today we saw that Microsoft is going to include it into Bing.
That's what they think.
Yeah.
But can you explain a little bit about that tool?
It's just basically we say write a blog on the outlook of 2023, and it writes
ChatGPT.
Yeah, it writes an article based on the projections of what they can find on the internet. So it's artificial intelligence looking everything up, and they write an article about, and you can say, I want it to be positive, I want it to be negative, and they even put that in.
Well, we used it. Our marketing department used it.
Yeah, and I didn't realize.
No, me neither.
And I read it. I said
they used it for the invitation for the seminar of next week.
Yeah, and I literally said to her, I said it's really well written, but I miss why somebody should come.
Yeah, it's quite clean.
It's quite clean. Yeah, there's no triggers, no feeling in it.
No.
And maybe that's I don't know. We never really like to work with personalized non-personalized emails.
Yeah.
We are very, and it's very laborious, and it's maybe not the smartest thing.
But funny, it's on the market for a month. We tested it, and it was good, but it was not
okay.
what we were looking for.
No, not what we want to.
And there's also some statement of the CEO of Google. In the beginning, he said, we won't use that a similar tool because. There's a lot of risk in it because you can do all nasty things with it. You can say, for example, I want to give me a blog about the weapon industry, illegal weapon industry, and then make a blog. So that's why we don't take the risk. But 2 weeks later, he stated he shifted internal departments and he shifted the budget for 2023 to go more to that direction because they have a lot of artificial intelligence already, and they have a lot of implemented. They have a lot of projects. BIRD is called one project, and but now he realizes that they
can't go around it. They have to do it.
No, and today we use it at Microsoft, the competitor in a certain way of Google. They announced to work with Bing, the search engine.
Bing, yes.
So that should people look at it. But the funny thing is, so I said to you, okay, hey, what is the price of Microsoft doing?
And then it went down. I lied a little bit. It was -$4, so almost 1%.
Oh, okay. But still, it didn't react.
No, they were not so positive about it.
Okay, so but back to the sectors, where a big part of the market believes in for 2023, tech. And I think you have to do your homework with the tech. I'm completely I agree that not all the tech is I think is interesting. No. Like Amazon, it's do your homework.
Yeah, it's different, depends per company. And I also want to highlight, for instance, and that's I think is really important, like companies that are in something or that are not making any money yet. And there's a lot of people that invested in those things after COVID, and they're really suffering from that now. Like Ballard Power Systems, I want to just mention a few stocks, and it's looking back, I know that, but I want to warn you also for this year to avoid maybe putting your money in those stocks, because Ballard is a really nice company. They have hydrogen fuel cells, the largest in the world. Company is about 2 billion worth, but they were at 15 billion market cap. And they have orders in China, they have a collaboration in China, and they sold 25 large fuel cells to Czech Republic for buses. They're doing a lot of stuff, but they're not making any money yet. And you see that the stock is hammered and it doesn't get up, So if you own those sort of stocks, or you believe in something, you sometimes have to really think about how long am I willing to sit in it.
Yeah.
And because the price is made by a lot of sentiment, and where people were willing to pay 80 times the valuation, at this moment you don't see that.
No.
So and there's many.
There's also like
Spotify.
They don't make a profit. And they will be hammered also. They're already hammered.
They're also suffering from those sort of things. So those sort of companies, be very, very careful.
Yeah, because the industry is doing their homework.
Yeah.
And they make different decisions now.
Absolutely.
And that's also
Tesla is also a good example.
You see a lot of people now. They make a profit, but
they make a profit. Yeah, but they had a really big fail on the delivery of the cars.
Yeah.
And the stock will print down 12% the other day again. So it's
What a lot of people are doing, and that's really good at the beginning of the year, to think, okay, what should I change in my portfolio? And you can do that on a sector basis. So the first sector, technology, the second sector, healthcare, and the third sector,
Industrials.
industrials. Yeah.
Yeah. Companies like BASF in Germany, for instance, they
And we have selected some ETFs. So it is always difficult if you don't do your homework in depth to
look for individual
localize.
stocks. You can do it in a screener, but you still have to really deep dive.
Yeah, so there are, and we can give some examples and we can make a jump. There are, for all those industries, for all those sectors, ETFs that select only on a world basis, European basis, or for an Euro base. So you can make the decision for yourself. Maybe you have already a lot of exposure in the US, and you believe in those sectors, but you want to stay more close to home. You say, for example, you believe in the industrials, and then you go to the SPDR MSCI Europe Industrial ETF. So we can share it with you, and that is quite, if you believe in those sectors, and we didn't make up those sectors, we did our homework, and then you can go to individual stocks. You can do that, but you can also combine it, or maybe to lower your risk, and you go to those ETFs that only invest in those sectors.
And then you can decide for yourself whether you want to do worldwide, indeed, European, or other areas, US solely. And
also we can in our webinar we're gonna discuss some stocks. So we don't gonna
the seminar, you mean?
Yeah, in the seminar we're gonna discuss our stocks. So we want to what we can do next week. We're gonna highlight some stocks out of it, but we don't want to talk too much about that
because it's a lot of work to prepare it, and then it's already.
And if you and some interesting stocks, I think that people can look at. If you look at the gold price, I think we have already I have here a chart in front of me, and that says the average gold price for 2023 will be around $1,700.
I'm not a gold fan, but there are rumors, and it's actually happening. The price is at the moment rallying. The first couple of days went with the market, of course, but there is a camp in the world that really thinks that gold's going to go even double that price, 3,500.
What do you think?
I don't like to be like a doom thinker, so I don't believe in those things. I think people that are so convinced of something so negative, I think you got a problem.
Yeah.
I'm really straight honest with you, because today also I saw that China, because China is going to take over the position of the US, and then the dollar is going to collapse, and the Bretton Woods needs to be redesigned, and all that sort of things. And it's a typical discussion, and you have it with a lot of people, and it's already happening right in front of you, and you don't see it. And I say, okay, what am I not seeing then here? And it's really, really tough to talk with these people about it, because they're so convinced about that the end of time is near. Gold is necessary. I think silver is more necessary, and it will have a price. I think if we look at commodities, and don't want to talk too much about commodities, but I think one commodity that you should have a look at is, I think, uranium for this year, and not maybe for this year. You can buy the Sprott Uranium Trust, and it's just what it is you're basically buying uranium. The only way to buy physical uranium, is through the Sprott.
What is this
physical uranium? Sprott is a fund builder, so you buy a stake into physical uranium that is stored somewhere I don't want to say in a warehouse, of course, but so what you could consider is just because why I'm saying this is because Europe closed the majority of their nuclear plants. There's at the moment about 64 plants in process. Takes a lot of time to build, up to 6 years. There's a lot of development going on. It's still the cleanest source of energy. You need like this much of energy, and
35.
You can create as much as I don't know exactly. I think it was. I'm not going to say exactly X amount of gallons of oil. So you need so much more coal, oil, and all that sort of stuff to produce the same amount of energy. Japan was one of the largest consumers of uranium. They have now said, okay, after Fukushima, we're going to reopen the plants that will require uranium. There are also a lot of companies in the process of becoming interesting that are doing something with the the garbage, so the rest of what because you create something, they can make again uranium energy out of it. There are projects on the way to build SMRs, which is like small modular reactors, which is really interesting because it doesn't take 6 years to build it. Now you can set it somewhere locally, a smaller plant which can create energy for a whole village, for instance. So I really think uranium had a big hit because they took a lot of it out of the ground until 2019 more or less. Then they stopped, and all the stock has been used in the existing plants of the source.
So they don't have any stock anymore?
Not a lot, no. So they need to start producing again, need to get it out of the ground, and there's a couple of companies that you can look at. Cameco is one, but I think if you want, there's the large, you've got Yellow Cake, which is literally the yellow cake uranium, which is that specific product itself. But I think that for yourself to build up as I wouldn't say like just dollar cost average, like you buy an ETF, step by step, maybe build up a position in uranium. It will never go down to zero, and the chances that it will rise in price are pretty probable, I think.
Yeah. Well, you invest in the company.
No, you invest in Sprott physical uranium.
Okay.
And that's actually the only way, the best bet, I think, to buy uranium on the stock market.
Yeah.
Also to do with energy, of course, but
yeah.
technically.
Yeah, if you look at the market and the S&P 500, we use it a lot as a benchmark. And we have the chart in front of us. And what you see since, when is it? I think...
the chart we're looking at here is from 2019.
Yeah, from here, this point. So the highest point, you see, I draw a line from the top, top positions, and it's exactly in line. And the tops are lower every time.
Yeah.
The first top, 1, 2, 3, they're lower. And that's always a really big pressure on the market. And also the bottoms are also lower. It's also not a good sign.
No.
So if you drag those lines, it can go, it can cross, of course, but if the bottom will be lower, and that will be happening in a few months, then what is the level then? It can be reached, 3,000 something, no?
Yeah, if I look at here, 3,000, the next level is 3,580, which was the low in October last year.
Yeah, okay, but if the new low, because it's
that's going to be lower. It's going to be then the level of December 2020 after the COVID recovery, which is 3,300. Yeah, you should be cautious because everybody's looking at the same chart, and it's also, I mean, these levels are similar to the Fibonacci retracements, which are really valid in the market, I think, because...
And also, what we discussed, I think 2 weeks ago, or what was it last week? No, 2 weeks ago, about the bear market, in which we say, okay...
Bear market.
Come on. Yeah, I think the bear market, that on average, a market, when it goes down, after 20% down, it enters the bear market. But then on average, it goes down from the top 32.7%, and that's also around this level.
That's from 4,800 to 3,300. Yeah,
so
it might just happen, It might just happen.
Yeah, but there's a big pressure on the market. Keep that in mind, and it's more for if you rebalance your portfolio at the beginning of the year. I think that's good to do. Be careful when you are 100% invested, and that's also what we see with private bankers, with private banks. Is if you have a portfolio that you are always 100% invested.
It's not necessary.
No, it's not necessary. And some of them, they shift, and that's good. And I think you have to have an opinion about it. It's an easy way to look at your investments. If you think everything is go up, you're really positive, you did your homework, you can be invested a lot.
Absolutely.
With everything that's going on now, but still high inflation and the war and the technical price pressure, you should rethink if you are 100% invested in stocks. Is this a good moment to make some shifts? And if you go a little bit further into the S&P 500, and then if you look at the PE ratio of the 500 stocks, and you can do two things. We did two things with it. You can look at what is the price earning now, and you can look back what was it in the past, and you take you draw the line. Or you can also, like a moving average, you can look at an average of the period of the last 10 years.
10 years,
And if you look at the normal PE, then you see it with the tops. Yeah, then it's on average. But if you look at the 10 years PE, the average, then you see here, we see it here, and we put it in the screen. Then you see it's still high.
Yeah, no, definitely.
Higher than the average. The average was almost 20.
Yeah.
And if you look now, it's around 27.
It's almost 30.
Yeah, 27,
Yeah,
28.
Yeah.
On the other hand,
Yeah.
this is on average going back 122 years, so back to 1900. And
the
if you
norms
look
have
at
changed. Huh?
yeah, and if you look at the chart, and you just do one step behind, and you look, you close your eyes a little bit, then you see that maybe you can also say from 1990, the market has been changed.
Oh, yeah.
So if you take the average from 1990, you have a much higher average. There's also always about averages. So maybe that's the new norm.
Yeah.
So the new norm is that we are willing to pay 30 something,
Well, I mean,
35.
if you look in December last year, even the market was completely crazy or completely addicted to the cheap money or whatever you want to say. But the people were paying so much times the valuation of the stocks compared to now. You should say, okay, if I was willing to pay it at that moment, then I should step in now straight away.
Mm-hmm.
Stocks are really cheap compared to 12 months ago.
And maybe I'm saying something strange, is that we started the first online broker in the Netherlands in 1997. And I think in the US there were in the beginning of 90s already brokers.
Yeah.
What you can also, it's a conclusion that I don't want to draw, but it's quite obvious since it's so easy to open a brokerage account and to have access to global markets.
Yeah, people have started, the willingness to buy have increased.
Now much more people are on the market. Maybe a lot of people that don't do their homework, they only believe more in the product or in the share.
Yeah.
But you see, since the online market, online trading is available, you see,
we have never been back down to 5 times the profit.
No, there's only
on
one.
Average,
in 2008 it was on 15. It was the 13.
But it's still, let's say 13, but it's still nothing. And I mean, compared to.
So the question is it the new norm, or is it still? Are we trading on a high level fee?
I don't know.
But it's interesting.
It's very interesting.
So please let us know what you think about that. Okay, so we talked about the different sectors.
Yeah.
And we also talked a little bit about
macro expectations.
Yeah, and uranium. I think that's an interesting one.
It's not something new because we all know it, but especially specifically in the time where we at.
Yeah, and the last 3 years it was not interesting to talk about bonds. A couple of weeks ago we talked about bonds, government bonds, that on average. With the duration of 2 years, you can have now 2% of interest. AAA bonds. Yeah. So, for example, from Germany, and that 2% is higher than on a saving account. So, what we will do and discuss in this seminar, but also in the coming weeks, we're going to share some more bond ideas with you. Yeah. As a alternative, if you decide, okay, I only want to be in stocks exposure for 50% or 70%. What I'm going to do with the rest, you can hold it on the sideline. You can also go for really AAA, AA government bonds. And also AA government.
Absolutely.
Company bonds, corporate bonds. And we're also going to discuss that in the seminar, but also the next weeks.
Yeah, absolutely.
Because it's interesting now to look at it again.
I agree with you.
And options, we're going to talk about options. And in the market report, we don't talk too much about options because it's specific and it's difficult to explain. But in the seminar, we also will do the next weeks.
Yeah. So as a wrap up.
Yeah, wrap it up. Make the summary, Martin.
Geographically, avoid maybe China. See what's happening the next quarter. I think we could dare to say that. Europe, US,
a little stronger.
Looking at sectors, we talked about healthcare, technology, and industrials. You can buy them through an ETF. I think we've given some brief examples. We showed in the screen, right? The small examples that you could consider. Markets are less high valuated than they were a year ago. For some people, that is a green light to step in. If this is the new normal, it's a difficult one.
price pressure, lower tops.
I think
Lower
it's very
bottoms.
important to see what this quarter is going to bring us in the sense of are we going to be benefiting from the last quarter of 2022?
Inflation is going down. Is it going down well enough?
What's happening with the unemployment? Are we going to see a continuous shift that we are going to be laying off more people? Is there going to get some air in the labor market? Also very important. You see, now you have all the news still coming out. Wages gone up 14%, wages gone up 16%. That is, of course, not sustainable because the profit needs to go from somewhere. So that will have an effect also on companies. Anything else? Anything I missed?
No, I think that was it.
No.
It was a high over, but it's also some inspiration for people to look at their portfolio. No?
Yeah. And I know it's difficult, but I always try to convince people that when they're looking at a position, as I have some clients that speak a lot about the same positions, and the value is the value. If you're happy with the value in your trading account, but there's one rotten apple in the portfolio, rather consider to throw that rotten apple out. Don't irritate yourself each time about this element because you could rather invest it in something else what you like much better.
Yeah, choose one of the sectors where a big part of the market thinks that it will be the outperformer in 2023.
Exactly.
Or you must have a strong opinion to have a different opinion.
I think we're going to wrap this up.
Yes.
Didn't we not say Happy New Year to everybody?
Happy New Year.
We finished.
Thank you for watching.
See you next week.
Thank you.